Good morning, good morning, good morning, and welcome to Your Business in Digital. Super excited to be here. I am Tamara Molu, founder of Malavan Digital Marketing Solutions, and we help businesses navigate the digital landscape. And today we are talking about the financial structure, your financial structure. So this week, earlier on Monday, we talked about the digital infrastructure, and today we are moving it over to your financial infrastructure. So I'm super excited to be here with Michael and Andrea. Michael, Andrea, introduce yourself, tell the people who you are, and let us jump into this hot topic. Let's go.
Good morning, everyone. Glad to be here. Michael Wilshire here. I'm the Director of Business Development and Sales at Monovan Digital. And yes, we're here every Monday and Wednesday. We're talking your business in digital. And what we're doing is really translating, helping be that translator for all things digital. So really glad to be here this morning. And as you said, Laura, always glad to have our virtual CFO with us. Andrea, good morning. Good morning.
Good morning. Are you hearing me okay? Right. Good morning, good evening, good night, wherever you are. I am Andrea Ragu, and I'm your virtual CFO for your small business. I help you navigate your financial journey.
So, Michael, what are you guys talking about today? I love being here with you guys on a Wednesday because I always, find I get a chance to take a step back, listen, hear what you guys are saying, and look at the other side of the business, right? So, what's the conversation today?
Well, today we're talking that all so important financial discussion, right? So we're talking, is your financial structure supporting your business? Now, why are we talking about this? We'll always talk about financials. It's how we measure the performance of our business. But a lot of things have changed given the advent of digital. So access has been, greatly improved. The tools that we have access to are greatly improved. And again, we're just always leaning into, are we leveraging everything to make sure that we're monitoring our business, business performance well, and understanding what we're looking for as far as growth. So that's what we're talking about this morning. So I know everybody's like, financial, oh my God, these things, these terms, but we're here to not only simplify it, but these are things that we have to know as far as, just off the top of our head, understand what we're looking at when we're, evaluating our business. So that's what we're doing this morning.
Sounds
Now, Andrea,
exciting. Tamara, you
yes,
excited?
I am excited about this conversation. So, for those of you that know, we are now running this. We are on LinkedIn, we are on Facebook, we're on YouTube, we're still on Clubhouse as well, but we are actually doing video live this morning. So, thank you all for joining us. Michelle, we see you in the chat. Good morning. Good morning, Anna. Good morning, Michelle. Good morning, Jake, Kamran, and Shuka. How are you?
so
Nice.
yes, we are doing it this morning. We're getting it started. So, Andrea, I'm going to just lead in. If you don't mind, tomorrow, I'm going to jump right in. We just passed the top of the hour. So, Andrea, we had our conversation this week and we are kicking it off. So, the first thing we want to talk about is accounting solutions. So, you want to just get us going there?
Right. So in the whole thing of accounting structure, your financial structure, and how is it how you leveraging it in your business, one of the first points that Michael and I came up with was the accounting solution, right? That's a key cog in that whole wheel, right? What accounting solution are you using? That's the first question is, are you even using one? Right. And then the second consideration you want to get into is, okay, are you using the right solution based on the type of business that you have? Because different businesses have different structures, different needs. So when you're looking at setting up your accounting solution, you want to make sure you consider things like the type of business that you have. So, Michael and I came up with the example that a real estate agent versus a contractor, they're both in the same industry, they're both in the property and real estate industry, but both of them have very different needs. So you want to make sure like you choose your right accounting solution for the business. Then, when you do set it up, we have other considerations, things like making sure it is connected to your different payment processing, and you want to make sure that that is everything all the different elements of the accounting solution are being maximized, because these accounting solutions are very versatile. They're very versatile, they're very useful. But a lot of the times what we see is that entrepreneurs and business owners are not maximizing it and leveraging what is in there. They're, first of all, now they're all online, so it's cloud-based. So we're not even talking about installing it on a single machine, and you could only do your work when you're at your business location. It's now fully digital. So you could log in, your staff could log in, everybody could log in. So there's no excuse for not having access to the data. But what we're seeing is that you open the account, as they say, and then it falls flat. So you want to make sure that first impact point is that you have a solution, that it is right for you, and that is connected to the different things. So especially in a retail space, if you have like an e-commerce app that is collecting your payments, you want to make sure you have some sort of linkage, whether it be through a direct digital link that automatically uploads, or even if you create a system where you ensure that information on one is transferred, even if it means somebody going in, downloading a report from one and manually uploading it into the other, you want to make sure that you have that. I've said a lot there.
Yes, you got us started. You got us started with the fire, right? So a couple of things I want to just, talk about there. So we've always been comparing to a very short 20 years ago, right? So 20 years ago, I think we all know, if we say accounting solution, which one comes to mind, right? There's one that comes to mind, but now there are so many, and you talk about choosing the right one. So as a business, what am I looking at when I'm trying to figure out like which accounting package, which solution am I going to? Or do I just take the off the shelf, what's popular to start with? But what are some of those things that I want to consider when I'm choosing that solution?
So absolutely what you want to look for is what are the needs of your business. So if I go back to the example that I use, the real estate agents versus the contractor, both are in the same industry, but both have very different needs. The contractor, he is going to incur things like work in progress because he has to be able to track his costs until the house is finished or his project is completed. The real estate agent, that person may have a project too, but that first of all, that may be a much shorter window because the house might just be listed, let's say 2 to 3 weeks, maybe a month, and then maybe they go into the escrow and whatever. But the things that the real estate agent needs is not the same things that the contractor needs. The contractor needs to be able to bill clients over a period of time, and not just bill, but bill with profit. So he needs to say, well, okay, I've completed 10% of the work. There, what does that look like? Is that 10? What is 10% of my cost? He also needs to check to see, am I within budget or not? The real estate agent probably doesn't have that need, that overarching budget. The real estate agent might probably have a very small budget, maybe just a couple thousand selling expenses to probably get the place cleaned and have it staged and that sort of thing. The contractor, he's dealing with a much bigger budget that he needs to make sure that he comes within. So you really have to sit and understand what is it within your business that you need to track. And then when you decide what you need to track, then you look for a solution that offers the ability to track those things. Because at a baseline level, all the accounting solutions, every single one of them, there are basic things that they will all do, right? What will be the difference now is the different type of things that they track, the different types of reporting. But at the end of the day, they will all do debit and credit. They will all give you profit statements, and they will all give you, the very basic things. But what you have to do is look to see, how deep do I want to go?
So what I'm hearing is reason number 458 of why you should be talking to your virtual CFO, right? So that we tend to take that approach sometimes where, as I said, we start a business and I might just pull something off the shelf. What's a name that's known to me? But I'm hearing very clearly a reason why I should be talking to my CFO, my virtual CFO. I should be looking at, did I choose the right package? As you said, given the subscription services, software as a service now, it's not that difficult for a small business, again, leveraging being nimble as a small business to change platforms, right? So I'm glad to hear all of those good reasons, why you need to put a little bit of effort and why it's worth your while to talk to a virtual CFO like yourself, Andrea, when you're getting into just choosing that package. And I'm glad that you kind of honed in as well on, the different use cases, because I would have assumed, just as you said at the end, that accounting is accounting, right? So, let me just get one, and as long as I'm doing it, that's fine. But I think the key takeaways are, as you said, what is the package tracking? Is it relevant to your business? Are you getting those numbers easily, right? So that's why we're looking at which accounting solution. Tamara, I don't know. I know this is not technically your wheelhouse, but any thoughts on that?
I mean, I'm a business owner, right? So I am always looking to track the money, track the budget. What are we spending? What are we doing, right? What's coming in? What's going out? What resources do we need to pay for? What are our margins? So I want to know those things, and I want something that's quick and efficient, right? Michael and I have a meeting. We meet at least every 2 weeks to kind of go over the numbers to make sure we're on target. Where are we spending more? And those solutions, we use QuickBooks right now, right? And then we have a little thing that we kind of go through that process, so we know exactly where things are. So it's really, really important, because the service that we provide is marketing, but understanding where the numbers are also tells me how much business do we need to look towards. Right now, we're already thinking about what's happening for January, right? Where are we going for January business wise? So it really sets the tone for everything. So we need to be able to look at the data as well. So yeah, it may not be my wheelhouse, but I'm like, where the numbers at?
And that's the thing. You said you're a business owner, right? So no matter whether it's your wheelhouse or not, you're a business owner. So it falls in your garden at some point. You may not be able to prune it, to make the best flower, to make the most pretty flower, but it is you as a business owner, it falls in your garden, and you have to be able to pay attention to it at least, and at least have a basic appreciation as to what it is needs to be done.
Absolutely. We have some comments. Michelle is saying good morning. And then we have Chef here saying, my frustration when reconciling, regardless of which solution, is that I still need to go back through PayPal and Amazon to sort through receipts. What are some of the best practices for reconciling?
So definitely, so so the first one of the basic things is, so I'm reading there PayPal and Amazon. So these are payments processing, really, the receipt of transactions on another platform that is not connected. So things like reviewing your bank statement to ensure that the things that you got from Amazon and PayPal actually came into your bank, then to bring it, and then from there now you could bring it into the one solution. The thing about reconciling, you eventually want to come to a place where you're reconciling one figure. You don't want multiple figures. Now, you would have multiple figures, but you have to find the linkage. So if you have something sitting in PayPal and sitting in Amazon, so the first thing I'd recommend is, okay, check to see if that transaction is even valid, right? Meaning, did I actually get the money for it? Did my product actually get shipped out, right? Because you may have something in transit, something may not have gone through, and then you'll be reconciling something that never happened. So you want to say, okay, pull a report, say, okay, what happened here? Check that now. Okay, this was a real transaction. I could see this in my bank statement. And then you confirm now, you take the bank, you move now from the bank statement to your accounting solution, right? So you're making sure that the information is moving, but you're not saying, well, I'm tracing this back to Amazon and I'm tracing this back to PayPal. No, you want to start moving it through almost like a funnel. So you take it from here, bring it here, and I bring it from here, and I bring it down there. I hope that clears it up for her.
And then, well, don't most of these solutions connect to your bank account anyway?
Correct.
And is there an opportunity also to really focus on maybe one point of payment all the time, right? How are you paying things? Are you paying things from this one bank account so that really helps you to stay on top of things, right? So you talk about this all the time, not mixing up personal, so you're working from this one bank account, connecting that to that system that does the reconciliation for you. I mean,
correct. Yeah, definitely. Yes, definitely. So you want, but the whole key is you're trying to get yourself down to one point of reconciliation and not reconciling different points. So you have the information in different places, yes, but you want to try to get it into one place. So let's get it into the bank statement, and then from the bank statement, you move from the bank to your accounting solution. But never ever try to reconcile A to B and C all together. That's a recipe for frustration. And somebody who is who is not accounting inclined, that's gonna frustrate the hell out of you.
That is so true. That is so true. Chef, reconciling is an exercise for sure. So you want to make sure, as you said, you just taking your time with it and reconciling, as Andrea said, one number. But I'm definitely curious as to why there aren't some of those connections. But this is something that we're going to talk about. We are going to talk about that. We are going to talk about commingling as well. But we're talking about, and this is something Andrea and I identified, where you have a payment processor and it's connected to your bank account. But what happens from an accounting perspective is that your accounting software is just reading the figure that comes in. It's not reading the why of that figure. It's not reading what product it was. It's not reading, any of that detail. So that's where you tend to have a disconnect, and you want to make sure that you can, if possible, make that connection so that there's a little more descriptive. So the same way that your accounting package is going to track outgoing funds and expenses, where you may have to have them tagged and categorized, incoming funds as well should be coming in the same way where they're categorized, so that you know where your sales are coming from. That is going to make the reconciliation process a little easier. So I would say, on top of what Andrea said in terms of actually doing the reconciliation, look at what those connections are and see if there's any way, see if there's a intermittent tool, maybe a Zapier tool, that if there's not a direct connection. But I think that question to me speaks a lot to what's the connection and why is it not there.
Correct. Correct. Connected dots.
All right, so we are.
We're
Right.
Facebook stage on Clubhouse.
Good morning, Favor. How are you? We love having you on stage. So I'm glad you're enjoying the conversation. We know it can go. So we are on Clubhouse. Just for those wondering who we're talking to, we are on three platforms. So four
Oh my God, we're
platforms.
on four.
We
Wow.
are like a national broadcaster this morning. This
We
is your
are.
morning.
We are.
Correct. This is your morning cup of tea, cup of coffee for the brain when we're talking all things digital. So
Yep.
Favor, thanks. Ed, still thanks for raising that hand. I think it's maybe subconsciously you did have a question that you wanted to ask. Maybe you come back later and ask it.
Right.
So
So
that takes us. Sorry,
no,
go
so
ahead,
just to
Tamara.
let everybody know, we are broadcasting across Facebook, LinkedIn, YouTube, and Clubhouse. So we have a lot going on this morning. You are right. We are a national broadcast.
Yes, we are, because we're here to bring that information to everyone. We're here to have these discussions, these conversations. Definitely welcome your input, your feedback. What are you thinking? Where have you struggled? This is your chance to ask questions and get expert advice for free. So, as we continue talking about, is your financial structure supporting your business? Now we get into the good stuff, your basic ratios. So, Andrea, now this is ratios. I have said it. I'm like ratios. I hated ratios in school. Never really got it. From a business perspective, I started to what helped was thinking about it in terms of a ratio being every dollar I spent cost me 20 cents, that type of thing. But as Tamara said, we are business owners. We need to know the language. We need to know what we're following. So what are we talking about when it comes to basic ratios?
So, I mean, so what is a ratio, right? So basically, a ratio is a measurement. I'm trying to put in name. I'm trying to not call out the textbook language, but it's a measurement. It's a benchmark that you calculate and you say, okay, um, this that indicates business performance then, right? So as you're, let's just take a little child. When a little child is born, you go to the pediatrician. The pediatrician will tell you, well, the child is 6 months old by now. The child should be sitting up, doing whatever. By age 2, you're supposed to be walking, maybe starting to talk. Those are benchmarks, right? Those are benchmarks. Are you hearing me?
Not on Clubhouse. Unmute on Clubhouse.
I'm on. Yes, I am unmuted. Hello.
I'm here near
Hello.
both places.
Okay. Yeah. So what it is really is benchmark. So like I said, I was using an example. So it will tell you by this time you should be doing X, Y, and Z, and whether that's good or bad, and you benchmark your performance against that. So and from a business perspective, that's what ratios are. So looks at different elements of business performance and say, hey, this is what this is what the industry is saying, this is what you should be aspiring to be, this is good, bad, whatever the case may be. So but it's a number, right? It's different, and it could be a percentage, it could be it could be a whole number, point something, but it's a number that you aspire to, right? It measures different areas of the business. So Tamara mentioned it before. She used the word margins. And I was like, okay, yes, that's the basic thing as any business owner you want to understand. What are the margins? And what margins are is just basically what is the portion of money that I am keeping within my business, right? So a GP margin is the portion of gross profit that you are getting to keep after you've dealt with your direct costs, right? Net profit margin is the line after that. So after I've paid all the costs, direct and indirect, what is left for me as the business owner to either reinvest into the business or for me to take home, right? You're talking net profit margins. So those are two main examples that and very popular ratios. Of course, there are a whole lot which we won't get into. But the point is that ratios are important to monitoring business performance. And as a business owner, just like we said with the accounting solution, understanding what is right for you, you need to pick the ratios that are right for you, right? Some ratios, again, different depending on the type of business you have, depending on the industry, it will matter more to you than it would matter to somebody else. So it might be, I need to track this, but somebody else might not need to track it because it's not important to their business. So if I use the example we had, the real estate person versus the contractor, same industry, but the real estate agent doesn't care about WIP, what we call, work in progress, right? The real estate agent will care about, well, what is the percentage of commissions I am getting based on the price that I've picked, that based on the price, right? That's what a figure that the real estate agent will be concerned about, right? The contractor, he's not going to care about that. He will want to know, well, where am I in terms of my gross profit, because cost of sales is something important to him. So it really varies depending on the type of business you have, and you would want to track things that are relevant to your performance. Meaning that if you were to take that number, focus on that number, and make it better, your business performs better.
So I'm definitely hearing here where you can be setting some KPIs, right? So I'm going to go through a couple of things here first. So first of all, those ratios, you can do that research and see for the industry you're in, what are the typical ratios. Now, do these ratios 100% apply to you? Every business is absolutely different, but it gives you a good yardstick as to where you should fall. What are we talking about in terms of how much money should you be bringing in per project, per sale, per conversion, right? How much should it be costing you to produce that as well? So ratios really give you a quick measure of exactly as I said, that business performance relative, and ratio is really that comparison, as you said, of one number, one aspect to another. So we're comparing, for example, what do I keep versus what I have actually earned in revenue. So it's always that comparative number. So whether we see it as a point something, as a percentage, what we're saying is of the whole, which is the one part of the ratio, this is how much we're getting per se, right? Now, I'd also assume that, again, you mentioned it, talking about the accounting packages, once you've set it up, you should be able to access these ratios very easily. And these are things that we normally wait till the end of the year, or some external need requires us to look at these ratios, right? But the question I want to ask is, can you have situations, say, like, I'm very liquid, but I'm not profitable? And in that question, this is why I'm going to say that, hence the importance of monitoring your ratios, because you could get a false sense of security based on what's happening just on a daily basis. Depending if your cash flow is healthy, you may have a false sense of security. So, Andre, I don't know if I open a can of worms there. What are your thoughts?
Yeah, you open a bit of a can of worms there, but we'll keep the lid on a little bit and just, pry it open a little bit, right? Because what you just talked there, that could be a whole other show. But yes, definitely, you have that opposing performance. I would say you could be cash rich but profit poor, and the other way around as well. Again, all depending on what is impacting your industry and what is impacting your specific business. And it's important to know which ones are more important, and so that you can track it, right? People look, and it's something I see business owners do a lot. They watch the money in the bank and they use that as the gauge that they're doing well. And it couldn't be further from the truth. Now, you're doing well in the aspect of liquidity, because it may mean, well, yes, I have money in the bank, right? Okay, but if you take it a step further and you look at ratios, you have money in the bank probably because you took a loan, right? You took a loan, and that was the cash that came to so you understand what I'm saying? You can't watch your cash balance because you haven't understood all the elements there. And then the other flip side of it is, okay, what about your profit? You could be making very low profits because of the fact that profit is impacted by things that the cash is not impacted by. So the two ratios, profitability, liquidity, two very important elements to the performance of the business, but they're not necessarily the same thing. Now, there's a way to bring them and reconcile them, which we as accountants do, right? But as a business owner, you need to understand both of them are impacted by different things. And I need to focus on them at different points in my business, at different points in my business journey, right? As a new business, cash is important. So you want to make sure you're generating the cash. You may not focus too much on profit. As your business starts to gain momentum and you start to get some structure and you start to go along your journey, profit you now start to want to understand, okay, well, what is actually working and what is not working. So you start to look at your profit statement now, and you start to tighten there, right? So it all depends on where you are. And you could have opposing ratios, and there could be times in a business where you will only focus on one because that is what you need to improve. You may not focus on the other one so much. So it's really a delicate balance of finding the right ones that you need to monitor for your business, and making sure that each one is at the point where it's supposed to be, because you don't want one really really good and then one really really bad. Yeah.
Oh, sounds like a lot of pressure. I know it sounds like you just need a virtual CFO, because now I'm sitting down here and I'm like, okay, so like the first thing I got like really well, I was just like, yeah, I'm a business owner. I need to understand this. Now I'm like liquidity, margin, ratios, blah, blah, blah. And I'm running my business. The only way I can do this is with a CFO. But let's talk a little bit about the fundamentals and how does a business owner even start to kind of, start thinking about this, because that's sometimes we're not there as we get into the business, right? And that takes a bit of education. You guys are now, you guys sound like subject matter experts. I'm like, break it down for me like I'm a 2-year-old.
Yeah, I mean, and that's the thing. As a business owner, you really have to have an appreciation for it. You don't need to be an expert in it. You need a subject matter expert like myself to help guide you, right? But the important thing is understanding the basic of what it is, and then understanding that you need to understand it, right? Probably the why. Okay, why do I need to know this again? Oh, okay, so margins mean, so if this figure says this, it means X, Y, and Z, right? You don't need to know the specifics. And now with the accounting solutions, some of these things it's calculating for you, right? A good accountant will set you up and say, hey, this when you click here, take this figure over this figure, and you're going to get your margin. Or the report, I think some of the um, accounting solutions themselves gives it to you, right? Some of the margins and stuff, right? But a good accountant, if you work with an accountant, you could have it set up in your business that once you know what this figure is, it will generate and calculate for you. And then you could sit and have an appreciation as, okay, I moved 2 basis points from last quarter to this quarter. What does that mean for me? Am I supposed, did my basis points move in the right direction? because that's the next thing. It moved from 23% to 25%. Is that good or bad? So you still need to have a basic understanding of what the ratio represents, but you don't necessarily have to have, the expert level. And again, like you say, it keeps pointing back to the fact that as you need to have that financial person in your corner to help translate it for you and break it down for you and say, oh, okay, here's what happened here. You move from here to here, and I could see, because then as an accountant, if somebody gives me that and says my ratio moved from this to this, I immediately start to go through the elements of the ratio to see who caused it. And I might come back to you and say, you know what really happened? You see this line here, your salary figure went up. So you find you just, and then the person will say, oh yes, I did hire 2 extra people because we had the Christmas rush and did it right. That's what. So I have now translated to you what the figure meant, and you now have an action because you now know, oh, this is what happened. This is how I can fix it.
And just to add to that, so when we're looking at that ratio, from a business perspective, what you're looking at is that HR cost. So the ratio is always going to speak to it's always going to speak to some activity or area of your business, right? It's always going to speak to something that you're doing. And I think that's the main thing. We talk about ratios, we say gross profit, but we're talking about those elements and those line items on your chart of accounts that speak to an activity. So when you talk to an Andrea, what she's going to tell you exactly that is what does it relate to in real terms in your business. So when you're looking at that ratio, what you're keeping in mind, what you're really keeping in mind is the spread between the cost I'm paying for goods and the cost I'm selling them. Is that still a good spread? Is it still covering what I needed to cover? Is my human resource needs, is it, do I need to increase my human resource needs? The financials are merely that means of measurement of these activities. So once you get that, your mind wrapped around it, these are the translation or how we represent activities in a numerical basis, then that kind of eases the blow of, okay, it's not about remembering the ratio, knowing the name of this ratio, but understanding where these numbers are coming from in terms of literal business activity. Right? So I hope that made sense. I hope that cleared it up a little bit.
It needs comments. That's what I heard. We had a great conversation. What I heard is hire a virtual CFO. And then Michelle is saying, Andrea, you've again validated why investing in an accountant has been well spent money. This can be so overwhelming. So
it absolutely can be, but that's why we're here. That's why we wake up this early in the morning to talk to everyone, because we know that these are common problems, challenges. I like to say challenges, not problems. These are common challenges that we face as business owners, right? And we've got to wrap our head around it because it's going to make the difference in the long run. So that takes us to, the next point, which I know we can talk about as well for a while, but invoicing and payments, right? And I've gotten where I sit, I've seen and gotten, a number of different invoices and types, and I've been in that seat where I've kind of said to other people, well, you should really include this on your invoice, do your payment terms match, accounting for fees, that whole gamut. But Andrea, I don't want to take away that spotlight. Invoicing and payments, talk to us.
Making sure I am unmuted where I need to be, right? So the thing about invoicing and payments is the connection. That's the number one thing I would say. And what I mean when I say connection, meaning you can't just invoice and then there's no payment process to follow. You can't have the two operating on different silos and not recognizing that one impacts the other, right? So you want to be able, if you're invoicing, what is the process that follows to ensure that payment is made within a timely manner or within the terms that you have set out, right? So service providers versus retail. So, okay, the real estate agent and the contractor, again, we come back to those, you would find for them, they may invoice, but they may not get paid right away, right? They're not a retail space. If you go to a retail space, so, Chef made a comment just now. So Chef is retail, right? So I think she has her subscription boxes, etc. So it's an immediate consumption of you order a box and you get it and you pay for it, right? She doesn't really have credit terms. Somebody like me, I may have credit terms because I may say, well, okay, I'm delivering my service over a period of time. So I may want to bill you over a period of time, similar to the contractor, right? So you want to make sure that there's a definite connection between creating my invoice, getting that revenue in, and getting the money to match it. Because here's what happens. And this, if you don't have that connection, when you pull your financial report, what you're going to see is high sales. Yeah, because we're booking the revenue, we were invoicing, and your cash balance is low because you have not effectively collected on the sale. And then, I don't know, a year later, the accountant comes in, tries to do your financials and says, do you realize you have to write all this off? And you go, what do you mean write off? What do you mean? Well, you never collected it, so it's a bad debt. And your mind starts to go, but I don't understand. But yeah, no, I made the sale, yeah, but that's not a good sale. And we start talking to you now in the accounting jargon, and we start telling you, well, that's the impact, you know. So there is an accounting impact if you don't connect the two, right? That could, cause you to lose out on the sale that you booked in the year before. So, and then throw the ratio all up. So you see how everything is connected, right? Because then I'm going to show really good margins this year. Oh yeah, we booked it, but did you follow up and get paid? No. So next year, guess what happens? The accountant comes in and says, we're going to reverse all of that, because that wasn't good. So next year, my margins go downhill.
Because you didn't get the cash.
And I got chills just in
I was just
listening to
like,
you describe it.
I was just
I
like, what
have
is
to write it off, and I'd be watching you, like I'd be the business owner watching you, like,
Yeah.
what?
I was
Say
like,
what
what
now?
are the words?
Yeah,
Because
because
right,
you
with
didn't finish.
right, right. And sometimes you're so right. We don't think about, so that's part of that infrastructure, right? How does my invoicing connect directly back to my payment system? So we, for instance, use Stripe. And so we're able to send out invoices through Stripe, and that also connects back to directly to our payment, right? People can pay right there. Or sometimes we're paid through ACH, but we also are able to connect that invoice back to that payment. So it's really, really critical, because if you don't do that, then that's the most important part.
Yeah, you need to collect. You need to collect. So, and that's the thing. It's one thing to be collecting, and then maybe the records are not matching up. So you just need somebody to match it for you. But it's another thing if you're not collecting altogether. If you don't have that system in place that allows for routine follow-up. Hey, it's been 5 days past your due date. When are you paying? That sort of thing. If you let 5 days turn into 10 days, turn into 30 days before, and remember, while all this is happening, your business is running, right? So as a business owner, we can't remember all those things, right? And here's where it gets sticky. The more you do that now and you're not following up, when I realized it, when you watch the bank balance, you realize, how come I do have enough money to make payroll this month? I don't understand. But we had, we had good sales 2 months ago and then it hits you, oh, we did not collect. We did not enforce collection. So now, 3 months later, I'm like, oh, I don't have money to make payroll though, right? So the connection, it must be there. The connection must be there because it would make no sense. And the terms must be clearly outlined. People must know what they're getting into. So if you're a retail, fine, everything happens instant. I buy this product, I pay one time. But especially if you're a service provider and you're billing things over a period of time or you're giving people credit, it must be stated very clearly that payment is due within 15 days, 30 days, and failure to do so, we are coming and we're following up, right? And then if you have to get your other service provider involved, which is i.e. your lawyer, well then this is, you let people know that we mean business, right?
Andrew,
There's a cost to following up. There is a cost to following up. So you've now reduced what you're going to be getting, even from that point, right? So you haven't collected, you're going after that collection, but now you're incurring costs to make that collection. So you've now reduced that revenue as well, right? So all things that are giving me chills up my spine, that situations I just don't want to be in. And you touched on that aspect of terms, which is always a question, like should my terms be? Again, we are just giving reason after reason why, you talk to your virtual CFO, not just at tax time, right? You should be having this discussion all the time. I have gotten that discussion, I have gotten that question many times from vendors that I work with, other people. Yes, it's easy to, just look at your industry and say, okay, well, these are the terms that my industry normally has. But there are a couple of dimensions to that. One, it impacts your cash flow, right? First and foremost. So you want to be clear that how you are spacing your payments does continue to support your business, right? Now, the other thing is that your payment terms also, I would say, offers you an opportunity to set yourself apart from the competition as well in the way you deliver your service. So you don't want to just fall into those broad buckets. And as well, when you're structuring those payments, be clear on what decides whether those payments are made, right? So, case in point, you set the payments based on clear milestones, right? And if those milestones haven't happened, you can't invoice and you can't get paid. But you may want to consider that it's more time based, right? Because a milestone may not have been reached, not because of anything you did. It may be client side, it may be external. So you may want to just have that payment schedule just based on time. So all reasons to speak with an Andres, speak with your virtual CFO, right? Have that conversation because that's going to it's actually going to directly impact, as you said, at the end of the month. I know I did business. I've worked hard, but why am I not seeing it reflected in those numbers in my bank account? So that's where we're talking, invoicing and payments. And that leads us straight into that next side, which, we rarely talk about as small businesses, but it impacts us, which is bad debt, right? So, Andrea, keep it going. We're still on this. This is an extension, I think, of this point of invoicing and payment terms. Bad debts. How do we deal?
Yeah. So bad debt is let me tell you just a little history. Bad debt, what bad debt used to be was an accounting thing. That was just something your accountant came in at the end of the year and would tell you, well, yeah, we just needed to book a provision for it because the accounting standard said that so. And you go, okay, all right, and you go about your business, right? The accounting world has changed. And after things like you go all the way back to the financial collapse of 2008 come forward, the accounting standards have now recognized, you know what? We need to be more proactive with this whole thing. And they went through this whole exercise. I won't get into it, but just to tell you, went through a whole exercise on what the definition of good debt is and bad debt, right? And what they're saying is, well, before we used to wait until the person didn't pay to tell you, the business owner, that it's a bad debt, right? So we would come in at the end and we would tell you, oh, this debt is like a year old, so it's bad. Now the accountant has to watch you and say, well, from the moment you had that, from the day one, I'm going to have to start to charge you something for it. And you go, but the person hasn't gone bad yet. Yeah, but in case, right? In case. So that's what it stands. So your financials are now, so rather than waiting, picture it. So a couple of years ago, you'd wait until the person didn't pay, then to get written off. Now they're telling you, oh no, from day one, you need to start taking a hit just in case the person doesn't pay. So, what does that mean for you, the business owner? It means that the criteria that you set out to give somebody credit for them to become a debtor to you have to be more stringent because you have to, from day one, somebody has to be a good debtor, right? Because you don't want the chance, you don't want this person, you can't wait until the person go bad, right? Because you are getting impacted from day one. So what is the solution? Well, one, don't give the debt in the first place if you can't afford it. If you can't afford the repercussions, don't give the debt. Say here what, payment in advance, and then I start the job, right? Or two, you say, these are my criteria to before you are extended credit. Here's my criteria. You need to be paying me good for 90 days. When you start a new job, don't they give you probation? When you have a new customer, why are you giving the customer credit from day one? Do you know if the customer going to pay you? So new customers, you should have a very stringent criteria to say, you know what, until we have that relationship, no, you're gonna have to pay me cash first, you're gonna have to have some payments in advance. So you have to sit and understand if your business can afford this, that thing. you may not, you the answer maybe you cannot.
Oh,
Tomorrow's dying.
tomorrow's diet is
I mean,
dying.
she's like, don't they put you on probation? Like, but no, that makes so much sense, right? Before you really get to that space, you should really have that criteria. But I think sometimes as business owners, you're thinking to yourself, especially in the beginning, right? Do I need to prove myself, right? And we may, we sometimes make those mistakes in the beginning, but as you the longer you're in business, the smarter you get, and understanding that you should have those terms. You should be thinking about that as a part of your financial structure. If I am going to give credit, what does that look like for my business? And I love the idea of having someone prove themselves, right? You should have paid 90 days, and you paid 90 days at a time, on time, and then we're good to go. But then I also like that you said, hey, if you can't do that, have them pay in advance. So I think, that's sometimes businesses just need the power, right? They need to hear that, because I think you feel a little bit insecure around payment, around new clients in the beginning. So you may be willing to compromise a little bit more. So I really appreciate the spunk that you put into that point.
Yeah, we gotta get real, man.
And I like that what I'm hearing as well is that you have a range of terms, right, that apply to different clients as they move through those phases of um trusted. Tomorrow you want to meet yourself on Clubhouse again? Yep, gotcha. So you want to make sure that you're looking at those terms in that it's not just, okay, I've started and it's 30 days and then payment in full, or you've got to look at it on a client by client basis. But Andre, you said something that was like, wait, this is a change in the accounting structure. So I am absolutely accustomed to, and again, this is where we talk about keeping up to date with digital, is that bad debt to me, I always thought it's when at that point I went to collect, right? And the person said they didn't have. So that's a very significant change, to say that from the time I've booked that business, I am evaluating how much is my portfolio of clients really worth. This is going to come into play, especially for service-based businesses, right? I think that's where we are most impacted. It will impact product-based businesses if you are, I think, if you're more in the wholesaling line where you're selling B2B, so you're still product based and you may still have that type of payment structure. So definitely, and yet again, another reason, talk to Andrea, because what are those terms? How can you structure at least three different sets of terms to say that, yeah, I just booked business. I'm talking to you for the first time. You're going to get the probationary terms, to start off with. I've been doing business with you for a long time. So, I'm going to give you my standard terms or my preferred terms. And then as well, remember, all of these things, we like to link that financials are not something we are talking about in a silo. But all of these things are things that set you apart with your clientele as well, right? So remember, it's always speaking to that operational side and functional side of things. So we're not just talking numbers in a vacuum. We're not talking these concepts in a vacuum. We're talking, how does it now translate back into business activity, right? So we have had a time this morning, and that's going to round us out. We're going to round it out at the top with, I know we have two more points, but I'm going to jump to the last point first. And if we have time, we'll come back to the next one, which is that commingling, right? That word, that commingling. That's like, having my wife and my side piece in the same room, I guess. Yeah. So you just not something you want to have happen, right? These situations, right? So just as in life,
I'm sorry, did the
commingling
show
is
change?
terrible.
Are we on a
I am stealing that analogy. I'm stealing that analogy. That's how I'm going with that from now on.
Are we on a new show? What?
And the
I am
thing
going.
is, it is so
I'm
common,
going with it.
right? It is so common, and it is just not the right thing. It's just a bad idea for a number of reasons. But Andrea, take it away, commingling.
Oh wow. So like I love that analogy, by the way. I mean, because yeah, you're right, Michael. If they end up in the same room, what do you think is going? And I'm not sure. I'm not back. This is male and female, because women we just have the side piece. Everybody doing it. So the whole point is, you don't want the main and the side ever to be in the same room because it's hell to pay, right? We start seeing fights, we start seeing things. So think about it with the same way with your money. You don't want the business transactions mixing up with the personal transactions because you just won't be able to see clearly what is happening. You can't see clearly, right? You're not sure, okay, is the business really making a profit or is the business really making a loss? So what the common thing that I see business funds being used for personal. So we have the bank card, or you have your checkbook and you're writing these checks or you're swiping your card for personal because you say, well, it's my money. All well and good, guys. Yes, as a business owner, it is your money, right? But here's the problem. When you generate your income statement and you see, I don't know, a loss, you will say, wow, boy, I'm doing all this work and I'm still making a loss? No, not really. It's because you was tacking on personal expenses in there that the business had no right to bear. So you put the business you put the income of the business under unfair scenario. So yes, the business is going to return a loss. So now you start thinking, well, I'm doing something wrong. My business is failing. What? Separate everything, and you will start to see clearly. This is what happened to my business. You wouldn't be wondering, well, it's showing a loss because I did pass through some personal stuff. Well, then how would you know, going back to the KPIs we spoke about, the ratios, your ratios, how do you know what to do with your ratio? Because your ratio now has things that it should never have, right? So it really impacts your ability to see clearly. It impacts your ability to monitor the business performance and for you to then turn around and make better decisions. Because how are you going to make a business decision now based on financials that are clearly incorrect? Because it includes your personal spending, right? So you definitely want to be able to separate them. You want to be able to put systems in place that even if you use your personal money, because I do it sometimes, yes, you may end up spending business using your personal money sometimes on a business transaction, because it could happen the other way around, right? I could be spending outside and not reflecting it in the business, and then when the business shows a profit, I think I'm doing well, but it's because no, there's a whole set of stuff on your personal bank statement that you didn't bring in yet because you've been swiping your credit card because you want the miles. Yeah, I know. Yeah, we know. I know. We do it. You take the personal credit card and you swipe it for that big Amazon purchase because you want the miles. No problem, me I'm fighting you on it, right? But what did you do for the business side? Did the business pay you back? So it works both ways, right?
And on top
Tomorrow, I
of
want to
that,
hear tomorrow.
Those cash credits.
what's your reconciliation headache after that as well, right? What's that reconciliation headache because you're commingling, right? So when we talked earlier about reconciling, Chef had that question. So even worse, if I'm commingling, my reconciliation exercise becomes that much more difficult because now I'm not only just trying to go to one number, reconcile to one number, I'm trying to pull out everything that's non-business as well. So I literally have to go through line by line and say, hey, go through my bank statement line by line. Yes, this, no, that, and keep going until I'm done. So I'm giving myself more work, right? But tomorrow chime in. Yes, I know she get those miles.
I don't know, I felt like we were teetering with this conversation here. I'm like, what is happening? But I love it. I commingled a little bit yesterday, but actually what I did right away was I paid something on my credit card and I went to, because I wanted the rewards, right? I wanted that 3% cash back. And then I went right away and I actually paid the credit card from the business account so that I could, make sure that things are shored up, right? Mike and I have already kind of gone through. We know what the budgets are. And so, yes, I want to reap the benefits of those things, but I want to be sure that I'm actually covering my bases. So it is absolutely super important. And you really get to see what's happening with the business. And I think, yeah, game changing. But I love the analogies that you guys gave. It was definitely a little risque. I feel like that's the snapshot. I'm like, what should I cut out of this video today? And I'm like, commingling. When you have your wife and that's exactly what it is. I can't wait to to cut that piece of video and put it out there and go with it. That's how we're going to explain accounting going forward. But we do have some
You
comments
do.
saying businesses we patronize often ask for payment upfront and we don't blink an eye. We entrepreneurs need to take a page out of their books as well. Absolutely, absolutely.
100%
Yeah,
agreed.
I mean, and
100%.
and she touched on a good point there, right? You know, I think it's time as entrepreneurs and business owners that we stop calling ourselves small business or anything to do with size. I mean, I know we are small businesses, but we need to stop labeling our operations like that because then we'll never grow. Those corporations and businesses that you are patronizing 15 years ago, before you knew who they were where you are now, right? And they didn't get to be a corporation or a respected company by playing fast and loose with these type of things that we're talking about, right? They didn't get where they were without discipline, because everything that we've spoken about here, and even every time I speak and all the shows that we do, the core message will always come back to the discipline to implement these things and keep it up, right? So you have an accounting solution, great. Do you have the discipline to ensure that everything is getting recorded, right? And that you're going in on a monthly basis and pulling your reports? It takes discipline. And for a lot of entrepreneurs, it's not there, right? We just do it and we say, okay, yeah, I have it there, but okay, do you use it? Do you have the discipline to ensure that your money is not commingling, right? Do you have the discipline that when you swipe that card, that at the end of the month you sit with your statements? For some people, I could tell you personally, I do it on a monthly basis. I pull the card statement down and I sit and I put it on a spreadsheet and I tally them up and I say, okay, and then I save that in a folder. So when I'm reconciling and I see this lump sum that, okay, I paid back myself $3,000. What was inside of there? I go to that. Oh, look, my all the payments are listed here, right? These are the discipline things. These are the things that we need to do as business owners. So we need to start take a page out of the big boys book and follow what they are doing and start implementing it in your own business.
I have got to say, I agree 100%. Small business is a classification for anybody in the financial sector who is doing some sort of survey of businesses, and they need to separate businesses by size. Case in point, in that, coming from working in a bank and seeing all the multitude of ways they define small business, right? So there isn't even one definition. It's a mix of definitions. How many people you employ? What's your total revenue? And I think you are spot on in that you have a business. That's it. You have a business. It's at whatever stage it's at in its continuum, right? But labeling it, I just 100% agree with Andre. We should not be thinking of our business of I don't think anybody introduces themselves and says, yeah, I have a small business. Maybe some people do. I just say, yeah, I have this type of company. I have this type of business. And I think that definitely impacts how you're going to view things going forward, especially when you're looking at those financials.
Well,
Definitely, yes. Yep.
I'm going to fight y'all on that a little bit, right? Because of that classification, I feel as though people can say that they have a small business. What we're talking about is small thinking, right? And those are very different things. So I want us to, we really have to kind of open up the thinking. Putting a process in place does not mean that you can't be a small business. That classification is important. It ranges anywhere from about $500,000 to about $5 million. You know what I mean? I'm not mad at that. But the discipline that you talk about is where we need to come to. And that thinking can't be small, right? As you grow your business, you want to consider, if my first classification is small business, can I move to small enterprise, which puts me in a good place? And do I move to corporation, right? What's my growth process there? But what's my thinking? And it's the thinking that really pushes us forward, right? To step into the space of being an entrepreneur, you have to be disciplined, right? You have to think a little bit different. You're thinking, there's no box for you, right? So you can't even think outside of the box. There's no box. So you have to kind of open your mind to get to a place of, what are the processes that I need in place? How do I get my financial structure in place so that I can truly move to the next stages of business? So we're okay with small business classifications, but we're not okay with small thinking. I know y'all want horns.
I
Absolutely.
think
Absolutely.
I trumpets, not even horns, trumpets, trumpets.
Yes.
Like
Right. But
absolutely right, absolutely right.
Michelle is saying here the word of the day is discipline. And I truly believe that, right? I think you hit on something there. The word of the day is discipline. You have to be disciplined to get this stuff done.
Yes, financial discipline is very important, and building those habits early and even reassessing those habits if you've been in the game for a while, right? And you've just, you know what you've been doing has been working, but you haven't been doing it right. You know that to yourself. You've got to get things in order because again, it's going to affect your growth trajectory, right? So tomorrow, I think that was an awesome way to kind of round out that point. It's that thinking that we want to do. So I think that brings us to the top of the hour. We always have these, we think it's only going to take this long, but we really get into it. I'm glad that everyone, not only joined but participated. Definitely drop your comments, share this live. If you watch it this morning, if you know somebody else who you think can benefit from it, we are talking to anyone who you're just getting started or you've been in business a while, right? And what is some of the areas you think you need to tune up, you need to optimize on internally as well as externally? And of course, leveraging digital all the way, because I think the reason for this discussion mainly is that everything is at our fingertips, right? We talk about swiping the card, we talk about looking at the accounts, and this has a potential to do one of two things, right? Take us in the right direction or take us in the wrong direction faster, right? I think some of the ways banking was done, those limitations actually gave you a natural barrier. You couldn't just pop into the bank every so often and pull out money because that took time and so on. So maybe that was a protective layer of sorts. Now that we have e-transfers and all these things, more reason to be on top of your finances because it's very easy to spend, right? They continue to make it easier and easier to spend. So you want to make sure that you have that system in place. Just to kind of recap some of the points that we've talked about choosing your accounting solution right out the gate. Where does your virtual CFO come in and helping you make that choice? We talked about your basic ratios, understanding the language of business, ratios relating to your business activities and where they should fall. We talked invoicing and payments, bad debts, and commingling. So really encompassing discussion. We probably have points here that we could come back to and expand even further. But top of the hour, I know everybody has their day to get on with. So before we get out of here, Andrea, please let the people know where they can connect with you, the virtual CFO, because they need you.
So, guys, you can connect with those of you on LinkedIn. You could connect with me right here on LinkedIn. You could also find me. I am on Facebook and Instagram under ATR Business Solutions. I'm also new to TikTok. So if you want to head over there and check out I've been trying out this thing they call TikTok, and I've been posting my videos there. So feel free to follow me there. You can get more, you can get some more engagement and get some more tips there. And yeah, DM me and we'll chat.
Great stuff. And Tamara, thanks for putting this together. You can always reach me at michael@monovandigital.com. I am always happy to be here. We're talking your business in digital, where we're talking how do you think about your business digitally? How do you leverage the digital technology to grow, to move your business forward? So always glad to be here. Thank you very much, Dora. Thank you, Andrea, for coming and giving us this great discussion this morning.
Absolutely, guys. This was awesome. Awesome. I love being here on a Wednesday. I feel like I get so much great information. The conversation was definitely on fire today, sometimes a little bit hotter than I expected. But we're really pushing businesses and giving them the tips that they need. These are the things that they need to hear. And I love that we are again helping to translate not just the digital, but the financial side of things as well, too. So really great conversation, guys. Thank you. Thank you so much. Guys, come back, listen. We are here on a Monday. We are also here on a Wednesday talking to you about your business in digital. We want you to be able to think about your business in digital. We know that it's hard sometimes, right? But we're helping you to do that. We're bringing amazing subject matter experts to the stage. Michelle Gordon and I are here on a Monday with Michael. And of course, I'm here sometimes. Michelle will be here sometimes with Michael and Andrea, but we will be here to support you through this process. Definitely, definitely join us. Tell everybody that we are here. 7 a.m. cup of tea. Have an amazing day, guys. Take care. Bye.